program. IndyMac Bank Loan Modification Program. First, IndyMac was the first financial institution to broadly offer loan modifications to their mortgage customers. When the FDIC took over IndyMac, it became the first test bed for extensive loan modification policy. If you have a loan with IndyMac Bank, now One West Bank, you are eligible for this program. However, I would strongly suggest pursuing, if any option at all, the Making Home Affordable. Now this program, what differs between this program and the Making Home Affordable is 38% versus 31%. We're going to go into that right now. If you have a $2,000 a month income, they want, after the modification is complete, for your mortgage payment to be 38% with this program, or less of your mortgage of your income. So let's say in this example you have a $2,000 a month income times 0.38. Your payment should be, according to this program, $760. Okay, folks. The way I did that was I took your income times 0.38%, and that's where your payment should be. Now, folks, I just gave you the end-all tool right now. People will charge you $2,500 to $5,000 to structure some paperwork for you when I just gave you the calculation itself, and that's something you guys can do with a $2 calculator. Okay? If you know how to structure the rest of your debt, of course, as well. But this program, the gist of it is 38% or 38 cents of every dollar you make is allowed to go towards your housing expenses, which includes your principal, your interest, your taxes, and your insurance, and your homeowners association dues. Now, the Federal Housing Financing Agency program, it became available approximately around December 15th of 2008. Who participated in creating the Streamline Modification Program? Is this identical to the FDIC program? Well, this program, the FHFA, several lenders came together that volunteered to say, hey, look, we're losing money here. We're going to go ahead and try to offer loan modifications. And the first program that became available through the lenders that opted into the program was the FHFA, which they essentially, I want to say, copycatted the FDIC's taking over of IndyMac Bank's program, and this program became available to the general public around December 15, 2008. Now, the Home Affordable Mortgage Program, this is what everyone keeps hearing about in the news right now. It became available in March. Unfortunately, lenders were slow to react and offer this to their clients. It became available in March, and some lenders didn't even train their loss mitigation reps on this program till June, July, August, September, depending on what lender. They were very slow to react. Okay. Now, the benefit of this program is that it tries to further reduce your mortgage payment. Now, this program seeks to reduce your monthly mortgage payments to, or as close to, but no less than 31% of your gross monthly income. Okay. Now, in the other example, that was $760. Now, let's look at this. If you have the same income, $2,000 a month times 31% equals $620 a month. Now, folks, when you're trying to do your own calculations, okay, you look at your income, you do times 0.31%, that payment's got to make sense for the lender to accept it. Meaning, if your property taxes are $400 a month because your taxes are just high, and your homeowner's insurance is $100 a month, well, that's already $500, assuming you have no homeowners association dues, which means that leaves $150 or $120 in this example as a net to the lender. So every single month, the bank's only going to make $120 a month. This is where these kind of situations come into play, where it's like, hey, I didn't get